Let me quickly talk to you about the top 5 business lines of credit with easy approval. Don't go anywhere. You're going to love today's conversation, I guarantee it. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous. If you were to ask me, if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to share with you the top 5 business lines of credit with easy approval. Whether you have poor credit, fair credit, or excellent credit, these business lines of credit are great for all kinds of businesses. Number 5, we have here Cabbage. Our score 8/10. So when you think about Cabbage, I want you to think about a lender that has a diverse mix of loans and lines of credit. What are the pros and cons here? You have a simple application process with minimal documentation required. This is really good. You have financing up to $150,000 available within a few days. This is really good, 1 to 3 days. And Cabbage accepts borrowers with a minimum credit score of 640. And there is a monthly repayment schedule as opposed to daily or weekly. So this is really good for your liquidity strategy. And there are no prepayment penalties, account maintenance fees, or draw fees. So those are the advantages, the benefits of Cabbage. What about the cons? You must have online checking or a PayPal account to verify cash flow. So if you are a cash-only business, they're not going to take you. And personal guarantee might be required on some transactions depending on the states where you are applying from, and also depending on the amount that you are asking for. And they do have a complex monthly fee structure, so this is something that you can actually discuss with Cabbage before signing up. And you cannot use this business line of credit to build business credit because Cabbage does not report to, they don't report to Dun & Bradstreet, Experian, Equifax, and SBFE. Okay, so this is something you need to think about. So overall, Cabbage is best for borrowers who don't have perfect personal credit. Okay, and if you need cash really fast, because Cabbage's online application can be completed in minutes, within 5 minutes maximum. And if you are a borrower who prefers a short repayment period, you can also go with Cabbage because they offer loans of up to $150,000 with repayment terms of 6, 12, or 12 over 18 months. Okay, 6, 12, or 18 months. So that's really what it is. And the thing is that in terms of funding speed, you can get the money as fast as the same day. This is really good. Okay, so Cabbage really stands out in terms of a fast access to cash, available to business owners with a fair or poor credit. There are no extra fees. Their fee structure is really complex. It's not suitable for all businesses, and you can't build business credit with it. Okay, and what are the requirements? Time in business 1 year or more, annual revenue $50,000 or more, credit score 640 or higher. Number 4, folks, we have here Capitus. Our score 8.5/10. So when you think about Capitus, I want you to think about an alternative lender that will work with you no matter the operational stage of your business. Okay, and we love the fact that with Capitus, you have access to a wide constellation of loans. For example, you have a business line of credit. You have a business line of credit, and here are the requirements of. You also have a business loan and other forms of financing. Okay, they do have competitive rates, a 5-minute application, approval in as little as 4 hours. So they really are good in terms of approving you real fast, and there is no origination fee. What are the requirements? 650 credit score, 2 years at least in business. Your annual revenue, they want you to have $180,000. That's the minimum, and that's gross income. Okay, so when you think about 180, you are thinking about $15,000 average monthly revenue. Okay, so overall, one thing I need to say here is that the size of your credit line is depending on what you plan to use the funds for, and only you can determine this amount. So this is why you might want to have a business plan attached to the plan. The business plan attached to the loan application rather. Okay, so and lines of credit arranged through Capitus can range from $10,000 to $250,000. Okay, and they do have a more comprehensive pre-screening process so that loan approval is faster. I told you before, you can get approved in as little as 4 hours, as long as you have all the documentation ready. So they'll ask you what your contact information is, the type of business you have, how long your business has been running for, your estimate of your credit score, what if loans, what if any loans you already have. Okay, so your existing debt schedule, very important. Your gross annual sales. You need to choose the loan amount, why you want a loan, so that the use of loan proceeds, very important, and the information about the owner or the owners. Okay, so you might want to consider a business line of credit from Capitus, because you this money will stabilize your cash flow, will help you actually develop a good liquidity strategy. You have easy access to cash, you can save money, and we'll love the fact that you can increase adaptability. In other words, let's say you are in an industry that is constantly growing, that's growing like crazy. By having extra cash, you can actually initiate the kind of activities you need to seize market share. Okay, and to apply, this is very, very, very easy. You have to do things online. It takes about 2-3 minutes, in some cases 5 minutes to get started. You simply fill out one online application, upload your 3 most recent bank statements, and you're all set. So upon receipt of your application and bank statements, your financing specialist would be in touch, letting you know the credit line size for which you qualify for, and they will walk you through the next steps. Okay, so this is really good, and they sort of cover multiple industries. Not a problem. Number 3, folks, we have here Bluevine. Our score 9/10. So when you think about Bluevine, I want you to think about a well-diverse lender. Okay, they have a lot of advantages and a few cons that you need to know. What are the pros? The pros here: cash can be available within 12 to 24 hours, and they have multiple term lengths for different financing needs, a low minimum credit score requirement, and Bluevine is very startup friendly. They accept borrowers with a minimum of 6 months in business. Really good, 6 months. What about the cons? They may require weekly repayments. They require, for some deals and in some states, personal guarantee. And also, if the amount is high, let's say $200,000 or $225,000, and Bluevine is not available as of the date of this show in North Dakota, South Dakota, or Vermont. So those 3 states, they still have to comply with the regulations there, and rates can be high compared to traditional lenders. So the estimated APR goes from 15% to 78%, and minimum credit score 600. Okay, and in terms of, so you can get business lines of credit up to $250,000. Okay, that's what it is. So those are revolving business lines of credit up to $250,000 with repayment terms of 6 or 12 months. Okay, something you need to think about. And you need to pay a $15 fee to receive funds via wire transfer, and late fee may be applied on the information on the loan amount if you do not pay on time. Okay, and repayment schedule weekly or monthly, and you can get the cash as fast as the same day. This is really good, but generally, based on our research, this may take up to 3 business days for funds to process, depending on your bank. So this is really good. So when you think about Bluevine, you want to think about a company that offers quick funding. Okay, they have flexible eligibility requirements. We love that, because if you think about it, the lenient credit score requirement of 600 is really good, and they will consider borrowers with 6 or more months in business, making it a good option for startup business loans as well. They have large credit lines, limited fees. Okay, and Bluevine can certainly improve in terms of their price transparency. Okay, their APR transparency. They can be expensive, because think about it. They have APRs that can go all the way to 78%. This is huge, and sometimes they want you to have more frequent repayments, which can be a problem for some business owners with their liquidity strategy, because they want you to pay like weekly, for instance. Okay, so, and here are the Bluevine loan requirements. So credit score 600 or higher, time in business 6 months or more, annual revenue $120,000 or more, so that's $10,000 or more, and the 3 states what I told you where Bluevine is not available: North Dakota, South Dakota, and Vermont. Number 2, folks, we have Balboa Capital. Our score 9.5 over 10. So when you think about Balboa Capital, here are the pros and cons. The pros: you have easy access to financing with low eligibility requirements, speedy funding process, and equipment financing product offers a corporation-only guarantee option, so you don't have to pledge your personal assets. Okay, so this is really the definition of what we call here on this show EIN only, business funding. Most of those business lines of credit can be EIN only. Okay, you just need to know how to structure the application so that they don't touch your personal affairs. Okay, so here are the pros of Balboa Capital. I just give them to you. What about the cons? Well, the rates can increase the cost of financing. So there's a lack of pricing transparency, including Balboa Capital interest rates on their website. For equipment financing, you don't own the equipment until after you repay the loan. Okay, and hard credit pulls may affect your personal credit score. So this is something you need to think about. Now, when we think about Balboa Capital, you have $5,000 to $250,000 revolving credit lines. You have same-day funding possible, and there's an easy online application. Okay, all credit is considered. This is really good. They have 1-hour approval decisions. You can repay daily, weekly, or monthly, and you only repay what you draw plus interest. And they do have some competitive rates. And one thing I want to say here is that when we talk about the details for Balboa Capital business line of credit, the loan term can be 6 to 18 months. Okay, sometimes they will charge you interest rate 1.1 to 1.2 factor rate. And the qualification for Balboa Capital: annual revenue $300,000. Personal credit score, they will take you around 500 or 550. But in some cases, they don't really pay attention to your credit score because they look at your liquidity situation. Okay, and the time in business, 1 year. So $300,000 gross income per year, time in business 1 year. And Balboa Capital borrower eligibility. One thing you need to understand is that eligibility will vary by which Balboa Capital financing product you choose. But normally, if you choose business line of credit, the requirements are more lenient. Okay, and they don't serve a few industries. So there are industries where they're not currently into: oil and gas, extraction, durable medical businesses, adult entertainment, gambling, lottery, casinos, aviation, and boats. And in terms of financial history, they cannot fund a business that has a tax lien of over $75,000. They require that 20% ownership be represented in a funding application in some cases, and they will not fund businesses with over 5 non-sufficient funds transactions or 5 overdrafts per month. They cannot take a second position to other debts, and they require businesses to have at least 3 open trade lines to qualify for equipment financing, and at least 2 open trade lines to be eligible for a working capital loan. They will consider your personal and business credit scores during underwriting, but they don't require a minimum score. They require at least $10,000 per month in credit and debit card deposits for merchant cash advance applicants, and 50% of a Balboa Capital working capital loan can go towards refinancing pre-existing debts. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Security Kiwi Show. We are still having a conversation about the top 5 business lines of credit with easy approval. And number 1, the best of the best in our view, we have here Lendio. Our score 10 over 10. So when you think about Lendio, I want you to think about a marketplace lender. Okay, this is great. They have a massive library of lenders, a wide constellation of loan products, top rankings in online forums. And we love that. We love the fact that this is a company that is constantly innovating. Okay, wonderful. And what about the pros and cons here? Pros: you have an easy 15 minutes application, loan options for more than 300 lenders, variety of loan types, helpful loan calculators. You have a live chat option. This is really good. And there is a bookkeeping software incentive. And we love the reviews that are stellar. And in terms of loans. The loans go from $1,000 to $500,000. Loan terms from 1 to 2 years. Funding time between 1 to 2 weeks, depending on the lender. Okay, remember, this is a marketplace lender, so you have to choose one lender or two or whatever and just evaluate their offers. Okay, and interest rates range from 8% to 24%. This is really good. 6 months or more in business, $50,000 or more in annual revenue, credit score of 600 or higher, and they may require collateral for large transactions. Okay, and you only pay interest on the funds you use, not the entire amount borrowed. So this is really good. So when we think about Lendio, you're thinking about business line of credit. You also, I mean, you have a large variety of loans, okay, including accounts receivable financing, business term loan, short-term loan, business acquisition loan, SBA loan, and so on and so forth. And we love the fact that they have a great series of loan calculators that allow you to know exactly how much you can pay. Okay. What about the cons? Well, we think that they can improve on the options, the variability of funds. Okay, the variability of options rather. And Lendio, at the end of the day, is not a financial institution. They are a marketplace lender, so it's something you need to think about. And there is no face-to-face consultation. So if you are the kind of borrower who needs to have a face-to-face, a live conversation with someone, it's not going to happen with Lendio. Okay, not at all. And one thing you also need to understand is that Lendio has a simple application process, so you don't have to waste time, being unsure of what to do next. A personal funding manager will walk you through each step. You don't have to meet the person, but you have someone to help you. And a large number of lenders in its business loan marketplaces, it's kind of good. The large number is good because you have more options. So that's really what you should think about. Okay. So I gave you the list of the top five business line of credits with easy approval. Now let's have a general conversation about this business lines of credit. The question is, should you get a business line of credit or a loan in the first place? Because if you are a startup or you are an established business, the whole idea is you're trying to look for extra cash, right? You have liquidity problems. You're trying to find ways to adapt to your business to changing conditions. So the question is, should you get a business loan or a business line of credit? It really depends on a lot of factors. It depends also on your liquidity needs. Okay, so once you have created a funding plan that shows how much money you will need to borrow, when you will need to receive it, and when you hope to have it repaid, you'll be ready to survey your loan options. Okay, one of the first decisions is, what are the benefits and disadvantages of credit lines versus loan options? Well, when we think about business line of credit, you are thinking about the terms. Okay, you're thinking about, for example, the rates. Because if you think about it, a line of credit is simpler to acquire and use because it shares so much DNA with the credit cards most people already have in their wallets. Basically, if you know how to use a credit card, you know how to use a business line of credit. And depending on your unique situation, you can qualify for up to $500,000. Okay, the interest rates start in the neighborhood of 5% to 8%, and your repayment terms will have a maturity of 1 to 2 years. This is what it is. So a line of credit, a business line of credit, gives you flexibility. So this is something you need to think about, okay? And if sales are consistent and you have the capital you need, there is no need to use the line of credit. But if you were to find yourself in a bind, for example, it's reassuring to know that you already have a safety net available, okay? So it's something you need to think about. And most business lines of credit are secured, but meaning the lender asks you to identify a personal asset or business asset that could be used as collateral if you were to default. However, in this show, I gave you unsecured business line of credit. Let's talk about business loans. Now, with business loans, you can actually have terms that go all the way to 25 years for real estate transactions. So this is basically for long-term transactions if you're looking to have some cash upfront and repay the cash over time. All right, and you can qualify for anywhere from $1,000 to $5 million with a business loan. Okay, and interest rates may vary from 4% to 25%, with a repayment term starting at 1 year and going up to 25 years. So the difference between a business loan and business line of credit is the urgency of the funds, the flexibility in terms of repaying. So for business line of credit, you have up to 18 months or 2 years With a business loan, you have up to 25 years. So, should you get a business loan or line of credit? It really depends on your situation. One thing for sure, business loans have fixed rates, longer repayment terms, and higher dollar amounts. So they are better for long-term financing. Okay, but they can be more rigid and slow-moving. So when short-term needs arise, such as repairs, financing receivables, marketing, adding inventory, or handling payroll, a line of credit can be ideal for providing the money you need in a hurry. Please check out this short video about our business loans and business lines of credit evaluation. We do have a rigorous method when it comes to analyzing, reviewing, and categorizing business loans and business lines of credit on this show. All right, folks, thank you so much. I want to quickly recap today's conversation. So, I was talking to you about the top 5 business lines of credit with easy approval. Number 1, we have Lendio, 10 over 10. Number 2, folks, we have Balboa Capital, 9.5 over 10. Number 3, we have Blue Vine, 9 over 10. Number 4, we have Capitus, 8.5 over 10. And number 5, last but not the least, we have Cabbage, 8 over 10. Thank you so much for your attention. I'll see you next time. But until then, remember, stay marvelous.